Hey everyone, welcome back to Corporate Decoder, the place where we spill the financial tea on public companies. And for today's filing, we've got something about redemptions and notes. So let's dive in and see what exactly is being redeemed. Acadian Asset Management Incorporated, or AAMI as they are known to the market, is here with a current report indicating a significant financial move. It seems they are getting ready to pay off some of their outstanding debt early. Now what we're seeing here is Acadian Asset Management Incorporated's plan to redeem all of its 4.800% senior notes that are due in 2026. That is a big chunk of debt, around $275 million. They previously announced this back on the 30th of October, and the actual redemption is planned for the 1st of December of 2025. The company is going to pay a price of $1,004.01 for every $1,000 principal amount of these notes. This price basically covers the current value of the remaining payments on the notes, plus a little extra, and importantly any interest that has piled up but hasn't been paid yet. The wording here about discounting payments to the redemption date using the treasury rate plus a small margin is a standard way for companies to figure out what it costs to call back their debt early. Think of it like breaking a lease early. You pay a penalty, but it is calculated based on what is left and market conditions. The accrued and unpaid interest alone is a significant amount, coming in at over $4.5 million. Acadian Asset Management Incorporated, traded under the ticker AAMI on the New York Stock Exchange, has its common stock registered as well. It is pretty standard for a company to have its stock trading while it also manages its debt, for instance, through these notes due 2026 also listed on the NYSE. Interestingly, the company is incorporated in Delaware, a popular state for businesses. They also have a commission file number and an IRS employer identification number, which are just for official tracking. And the report is signed off by Scott Hines, the Chief Financial Officer. This signature signifies that the company's leadership has reviewed and authorized the information provided in this filing. Now, from a broader perspective, what does this redemption tell us about Acadian Asset Management Incorporated? Paying off debt early, especially notes that are still a few years from maturity, can signal a few things. Firstly, it could mean the company has excess cash on hand, a good problem to have. It might also indicate that interest rates have fallen significantly since these notes were issued, making it cheaper to borrow new money, or simply that they want to reduce their interest expenses. For the investors holding these notes, it means they get their principal back plus accrued interest and a small premium earlier than expected, possibly reinvesting it in other opportunities. However, it is also worth noting that companies don't just redeem debt for fun. There is usually a strategic reason. It could be to clean up their balance sheet, reduce future interest payments, or perhaps to take advantage of lower borrowing costs in the current market. This move suggests financial health and a proactive approach to managing their capital structure. Overall, Acadian Asset Management Incorporated appears to be in a strong enough financial position to actively manage its debt obligations. This redemption of notes is a clear indicator of that capability. Alright, that is our breakdown of Acadian Asset Management Incorporated's latest filing. What is your take on this debt redemption and what it might mean for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord link in the description. Thanks for watching. See you next time.